All right, I think we are live. Welcome everybody to this pre-culture shifting weekend event brought to you by Logitech. My name is Andrea Hoffman. I am the founder and CEO of Culture Shift Labs and Culture Shifting Weekends. For newcomers, Culture Shifting Weekends is Culture Shift Labs annual summit, where we enable deals, collaborations, and wealth creation for our community of attendees and community of culture shifters. We have been doing this event in New York for 12 years and in Silicon Valley for 7. This is part of our Silicon Valley event, and it's the Athlete Investors Panel. It'll be very illuminating opportunity to hear from some current NFL players and what they're doing to create generational wealth, how they're thinking about life beyond the game, the other game they're participating in, the game of business. And I would love to introduce you, to our moderator today, Rolanda Johnson. She serves as the president and chief investment officer of Malcolm Inc., overseeing investment and financial decisions for a variety of portfolio companies. Rolanda is also the co-founder and general partner of Broad Street Ventures, a multi-million-dollar venture capital fund, co-founded, by two-time Super Bowl champion Malcolm Jenkins, who's here with us today. Prior to Rolanda's role here, she's a veteran in accounting and the finance industry and has over a decade of experience, which includes leading operational and financial audits at the Sci-Fi, which is a designated leading insurance company, Prudential Financial, and luxury jeweler Tiffany & Company. She has also led external audits and provided assurance on financial statements for the SEC clients during her tenure at Ernst & Young, one of our longtime partners for Culture Shifting Weekend. So that's great to hear. And her most notable client includes investment management firm with $70 billion of assets under management, which specializes in asset-based investing in private equity and credit funds. Rolanda, would love to have you introduce the panel, anything that I may have missed in my introduction for you. And it's such an honor to have you and the team, if you will, here with us today.
Thank you for having me. And I think you covered everything in that introduction. So we can get started. I want to take some time to introduce two men that are sitting on this panel that I've had the pleasure of working with throughout the years and who also have a history of success in the National Football League. As team captains, they've led their teams to multiple Super Bowls and have taken that same drive and passion towards their off-the-field initiatives. So first, I'd like to introduce two-time Super Bowl champion and New Orleans Saints safety, Malcolm Jenkins. In addition to his role as the chief executive officer of Malcolm Inc., which is a holding company for 5 business verticals that he's co-founded, including the venture capital fund Broad Street Ventures, Malcolm is also an executive director, a CNN contributor, an advocate for social change, as well as 3-time NFL Walter Payton Man of the Year finalist, who strives to make a positive difference in the lives of youth and underserved communities through the Malcolm Jenkins Foundation. So welcome, Malcolm.
Hello.
And now I'd like to welcome our second panelist, Devin McCourty, who's a 3-time Super Bowl champion entering his 12th year in the NFL as a free safety with the New England Patriots. He's known as a distinguished leader both on the field and off the field. Devin is also an investor, a spokesperson, and a philanthropist with multiple award nominations, including the NFL Walter Payton Man of the Year and Muhammad Ali Sports Humanitarian Award. So welcome, Devin.
Thank you for having me.
So let's jump right in. Malcolm, you're one of the co-founders of Broad Street Ventures. Can you tell me, how did this all come about?
Yeah, so what we're not going to do in front of all of these people is act like we don't know each other. For everybody who's the audience here, me and Rolanda have been friends since literally elementary school, since preschool. And we've been really close, and she's been advising me a lot about, my money, or been on my back about what I'm doing. And one of the things that we looked at, was you have athletes, especially African Americans. We talk about like, how can we, capitalize on the money that we've earned through labor, right? How do we take that money and double it, triple it, and create real generational wealth? And we started to look around and realize that the traditional things that athletes have been doing, especially with and just in stocks and bonds, that's not going to do it, right? That's not the way or the path to double, triple your earnings. And so we started looking into venture capital, and we literally took a flight down to Atlanta to visit with Rashawn Williams, who's an advisor to us, and he really just kind of broke down the game. And after that, I realized that I was amongst a bunch of peers who needed that information. And group economics was a big part of what we're missing when we're talking about building generational wealth. We try to do it on our own. And that's really nobody else builds generational wealth in a silo. And so I began to hit up my friends, Devin, a bunch of other guys who I knew were interested in investing and were looking for these type of opportunities. And we started Broad Street Ventures in 2020. Co-founded it with Rolanda and myself. It's a $10 million fund. We're investing into consumer products and tech companies. And so, yeah, that's how it started because of you pushing me and then realizing that this is a space, especially in sports and entertainment, that I think needs to happen at that group economics.
Great. And can you tell us what are some of the companies that Broad Street Ventures is already invested in?
Yeah, so right now we were in Airbnb before they went public. We're in Epic Games, Toro, Noble, Automatic, Zenwater, and then this past April we added to our portfolio Udemy, Dapper Labs, Therabody, who makes Theragun, and then Prezeba.
That is a pretty impressive portfolio, if I must say so myself.
Yeah, go ahead and pat yourself on the back.
All right. So Devin and Malcolm, as professional athletes who've been in the league for a number of years, what are some failures that either you have experienced in business or may have heard about other athletes, some of their failures?
I mean, there are plenty of failures. I think, the biggest problem with athletes is, as soon as you sign your contract, it's blasted across ESPN on every sports, app, your entire salary, right? And so people automatically know you have money and they come to you and they want to, go get investments. And the problem with that is, yes, we have some capital to invest, but we don't have the infrastructure to really vet deals. And so a lot of the failures that I had early in investing was just investing in deals that I wasn't able to do due diligence on. Right. It sounded like a good idea, but they either didn't have the team to execute it or something was wrong with the product. Or these are things that as athletes, we're focused on playing the game. We can't really vet we can't tell whether a deal is good or not. And oftentimes people will get told no 1,000 times and then come to us. We're the ones foolish enough to really cut that check. And I've done that, a few times. And this is why, it was one of the main motivators to starting this fund is not only to get guys into good deals and to get into venture capital, but to create a vehicle that guys can trust to vet those deals, to do all of that due diligence that as athletes, we just don't have the time or the bandwidth to do.
Yeah, I would agree with Malcolm. I think one of the biggest things for us as athletes, we don't do things together a lot. It's a lot of us trying to figure out things. And I remember one of my early investments was a barbecue spot opened up close to campus. It seemed like a great idea. It's next to the train station, foot traffic, everything, and it didn't work out. And I think as athletes, a lot of times we're like, all right, if I just put a little bit here because I know it could fail, it might not. So we feel good about it, but we never get the opportunity to take the next step. We don't know, usually don't know those people that are going to get us to those next steps, even though it's kind of crazy to think about. We work for an organization where it's a billionaire who makes money, who has a ton of different businesses. We don't usually have access to that. We're just the players. Like Malcolm said, we're the labor. So getting this opportunity to work with Malcolm and his idea and his vision, along with Rolanda, I know for me, was one of the biggest reasons I jumped on board is because we now had a vehicle and then we had an opportunity to do things together, not just us two, but my brother, some other former teammates, and then obviously other players throughout the league. So it's been a great opportunity, I think, for all of us to experience something new and try to create that generational wealth that you spoke about earlier.
Yeah, and it's interesting that you mentioned, you all play for organizations where the team owners are billionaires, and a lot of the team owners have their own venture capital funds, but they're not sharing. You're not getting access to those deals. You may not even know that they have a fund, so it's pretty interesting. I'd say it's also important to acknowledge the risk that comes with venture capital, and sometimes not everyone will be as successful. So, Malcolm, can you speak to that a little bit?
Yeah, I think, we've heard plenty of stories of players that have lost money, in various ways, especially through investments and bad business deals. So we're very, very conscious about, one, educating guys, but also our strategy. We take a lot of risk as athletes with our bodies, right? We can get injured and our careers can be over, which means that our ability to earn money can be, inhibited. And so the strategy that we take is we don't want to just be throwing people's money around. So we invest in late and growth stage companies, companies that are established, that have a good track record, that are more likely to succeed. But also the returns on those investments come back a lot sooner. So we're not holding up their money for 10 years. They're able to get returns in 2 to 4 to 6 years, knowing that guys' careers are probably, coming up or getting ready to be over as soon as they come into the league, essentially. So the biggest thing is like there's going to be risk, right? So we automatically target guys who may have the bandwidth for it, who have the stomach for taking some of this risk. But whenever you do group economics, that is the number one. That's the reason people do it together, because it but it mitigates some of the risk. So instead of me going to all of these companies and cutting, $25,000, $50,000 checks on my own money, I can only do that for so long anyway. So, it's only about 5, 10 companies I can invest in, but all of us come together. Now we can invest in 100 companies, and the success rate of one of those companies hitting and us getting the returns that we want go way up, especially, when we take into account that we're looking at the latent growth stage. And then the third part of the strategy is the top 20 VCs make 95% of all the returns in venture capital. At least that's how we learned, right? And so our strategy is very simple. Align ourselves with those top 20 VCs. And the one thing that athletes, especially right now, athletes have so much social capital that our names, get us into these deals that traditionally, like you said, we don't have access to, right? So we're in the locker room, like you said, where we work for billionaires that do this stuff day in and day out. And so what we started doing is leveraging our celebrity to get into a lot of these deals, understanding that these top 20 VCs are sports fans too, right? They like to have, our names on their press releases when they've invested in something. It looks good. And we take advantage of that to get into the door and obviously do it together. And we're cutting a lot smaller checks than some of these other companies. And that helps us, kind of mitigate some of the risk, but there still is risk.
Gotcha. So group economics, everyone works together. That helps to mitigate the risk. You're also not allocating all of your money into the venture capital space anyway. You still have your stocks and bonds. Those didn't go away. You still have all of your other investments, just allocating a small portion of it into venture capital. Got it. Okay. So can you tell me, the fund is still open? When will it be closing?
We're trying to close it, I think in September or the beginning of the fall. So it's still open. We're still, it's kind of an invite only, but we are, actively looking out for Black and brown investors in the sports and entertainment industry to do this together. But yeah, the biggest thing right now, and we're actively, recruiting and the biggest thing is not just, hey, give us your money and put it here, but it's like, hey, we want to educate you on how this works so that you feel good about it. And even if you don't, invest with us, the biggest thing is we encourage people to send us deals so that we can do due diligence for them. So that guys feel comfortable, putting their money into a company or feel comfortable putting their money with us. Yeah.
And I know for me, I think that was awesome, inviting two teammates and not just telling them like, hey, we got a venture capital firm, give us X amount of money, but sitting them down with Rashawn or Rolanda and them learning about venture capital and how it works and understanding how we're investing in the strategy. I think like Malcolm said, that's been huge for us as athletes to not only put our money somewhere, but actually learn when someone comes and talks to us, or we want to do some things and learn on our own. We now have a background, and I know that's been huge when you talk about trying to bring in more people and expanding.
Right. So education is very important. And I would say, athletes are in a unique bucket because, for the rest of the world or the workforce, you're working for 30 years, 40 years, however, before you retire. So you may still accumulate millions of dollars, but you're doing that over a long period of time. Where for athletes, you guys step out of college and boom, here goes millions. But then you're also expected, we don't know if your career is going to be 3 years or is it going to be 10 years or is it going to be 12 years? We have no idea how long you're going to play, but you're expected to live the rest of your life off of the money that you may have made, when you were 23 or 25. So it's a unique situation that you guys are in, but that's also the importance of understanding, financial literacy and knowing your options for things such as venture capital, where you can make an investment, but you have money coming in down the road that can help, you continue to support your lifestyle.
Yeah, that idea of living off of like these athletes, like living a lifestyle, I'm gonna play football and then I don't have to work again for the rest of my life is a myth. Like, especially in the NFL, the majority of our league is made up of undrafted players, right? And the average career of an undrafted NFL player right now is 2.6 years. So just think about anybody in any other, profession. If as soon as you came out of college, you were 2 years away from retirement, how would you deal with your money, right? You wouldn't be buying Rolexes, you wouldn't be buying cars, you'd be getting ready to set up the rest of your life. And then if you're a late round draft pick, it's I think around 4 years. And then if you're a first round draft pick, it's still the average is 7 years. So you've got to really understand where you are, what your strategy is, and the real risk that we run with just playing our sport. But then having a strategy that's like, okay, well, how do I take what I've earned in this sport for however long I've been in it and create an opportunity to make that work for me as I leave?
Right. And, you'll always see the headlines, so-and-so retired, or 3 years after retirement, they're filing for bankruptcy. And people always wonder why. You saw the headlines that say they had a $40 million contract or a $20 million contract. Where did it all go? But people don't factor in your taxes, your agent fees, your living. Maybe you started buying those Rolexes and you didn't set up your finances the way that you should. When you start to look at it that way, it's a little bit easier to understand how people are filing for bankruptcy. Maybe they only played for 2 or 3 years. They didn't set everything up properly. And here we are. But we are trying to avoid that with Broad Street Ventures and our education. So we talked a little bit about Black and Brown investors. So planning a second fund in the future that will have a specific initiative to support Black and Brown companies. And when we think about the venture capital space, there's not a lot of Black and Brown investors. Maybe only about 4% of the investors are Black and Brown. Then when you look at the companies that are receiving funds, it's only about 1% of companies that have a Black founder are receiving venture capital dollars. So in this second fund, with the specific initiative to support Black and Brown companies, Malcolm, can you expand on that? Because I know that's something that was important for you.
Yeah, I think that the first thing that we realized when we got in here is that regardless if it's a Black-owned company or white-owned company, whatever, any startup is risky, right? And so just throwing out dollars to startup companies in and of itself is something that we probably don't have the stomach for right away. And so we say, okay, let's build what we have here, have a strategy that's a little bit safer. And once we prove that concept, how do we take those profits and then push some of that into Black and Brown startups, right? The people who don't have the access to either, family and friends who have, high net worth, who can cut some of those checks to get people off the ground. Oftentimes in our communities, we don't have access to that. And again, any startup is a risky investment. So it's hard to go and get those investment dollars from some of the venture capital firms out there, because they're investing in the ones that they think will win, the most. And so it's going to take a concerted effort and to be very intentional when it comes to that, but also understanding that it is still, very risky. And so for us, we want to prove the concept with venture capital or with Broad Street Ventures Fund 1, and then Fund 2, we're going to take what we did in that and really try to have an impact in the Black and Brown communities.
Excellent. And Devin, as an investor in the first fund, why might this initiative, investing in Black and Brown founders, be something that's important to you?
Yeah, I think, Malcolm knows obviously because I'm a part of the Players Coalition with him as well. It's something that as athletes and as obviously young Black men, it's something that we've had a passion for, of trying to create not just wealth for ourselves and other athletes, but for people that look like us. When we go back in our hometowns, our family members, our cousins, our friends that we grew up with, trying to create that wealth and also that knowledge and education that we talked about. We want to bring that everywhere, not just where we go, but everywhere we've played, everywhere we've been. I think that is something that when we talk about legacy, is something that we want to be a part of for ourselves and also for our kids to see that as they grow. So I know for me, obviously making money is important and we all want to do that, but I think it's also creating an avenue and a pathway for the younger generation that look like us to try to follow in our footsteps and then ultimately create new paths for the people behind them.
Excellent. And before we move on to questions from the audience, I know that you both have done extensive philanthropy work in your communities. You both have been finalists for the NFL Walter Payton Man of the Year award. Can you tell us how the journey in venture capital ties into the work that you're doing in the community? I guess we can start with you, Malcolm.
Yeah, I think a lot of the education that, we've been getting as we've set this fund up and have just been talking to people, you start to realize that there's a lot of information that our communities don't get. And the earlier you get access to some of that information, the more prepared you'll be to start to invest, to start to build your money and be literate with your finances. And so one of the things that I've focused on over the last year is financial literacy with the Malcolm Jenkins Foundation. We partnered with Goalsetter to and pledged to start savings accounts for 1,000 kids, knowing that just having a savings account in your name makes you, I think it's like 5 times more likely to be able to have investments or invest in stocks and bonds by the age of 25. And just that simple gesture. And so that's been one of the things that we're doing, focusing on, like Dev said, the communities that have impacted me the most. So we started with a school in Philadelphia and plan to move to Newark, New Jersey and down to New Orleans, where I'm currently playing.
Yeah, I know I have a twin brother who also plays in the NFL, Jason. We started Chromebooks for kids. The pandemic kind of spotlighted just how under-resourced different communities are when it comes to that digital divide. So being able to get laptops to 2 school districts that we grew up going to, we've started that. And, that's been awesome. I think, like you said, Rolanda, when you start to talk about the educational part and creating investments, growing up, we didn't hear about those things. We heard about trying to be an entertainer or an athlete. So just trying to give kids a different outlook of things that they can do and still be successful.
Excellent. I think you guys did a great job. I think we covered a lot here.
Such a great moderator.
Oh, thank you. Gosh, this is great. We can move on to questions that we might have from the audience. I think that's on me to pull some of those up. Oh, wait. Okay. Sorry, guys. Here's where my moderator skills turn from an A to an F. There may be some questions I think that I can answer through the typing instead of reading out loud. We have some questions here about interested in becoming an angel investor. I can respond to that. Do you have any plans to invest in the LA area? Invest in terms of any companies in the LA area? Sorry, this question is from David.
Yeah, our strategy, it's not about really location. We're invested in founders kind of all over the country. It's more so just about the company, what they're doing, how they're performing, and if it's a good investment.
Gotcha. Okay, how much money would be required to start investing with Broad Street Ventures?
Well, the one thing that we realized too, as you get into this space, is that there are rules about who can invest in private equity and who can't. And that's one of the things that I think also excludes a lot of communities of color. And you have to be an accredited investor. And Rolanda, I think you can probably speak to what the official kind of qualifications are for that. But there are specific rules that don't allow everybody to invest in these type of companies.
Which, in my opinion, is a little crazy. So in order to be to count as an accredited investor, you must have a net worth of at least $1 million, not including your home. Or you must have made at least 200,000 over the past 2 years. If you're married, I think your household income has to be 300,000. And I think the last requirement may be you have a certain designation, such as like a Series 6 or Series 7 designation, which then constitutes you as being smart enough to be an investor. Where, we've seen the success or how much Robinhood activity has happened on Robinhood. You've had people that have been literally making millions of dollars. We saw what happened with GameStop, or people that are investing in Bitcoin. There's no requirement for you to invest, to get on Robinhood and start investing in stocks. There's no requirement for you to invest in Bitcoin or any type of currency, but there is a strict requirement for investing in funds and becoming an accredited investor. We didn't make the rules, but it's, in my opinion, it kind of prevents everyone from being able to participate.
I don't know what there are companies out where there are some. We've been really talking to a few, established funds and just business folks around who are Black and brown, and who also share kind of that same idea and have some ideas to get around some of those rules. So we're still trying to look for some of those loopholes, obviously, to add as many people or let as many of us into the door as possible as we kind of prop it open. But that right there is one of the biggest hurdles that we see as we move into space.
Yes. Okay, we have another question. It's about becoming an angel investor in an HR tech company, and also how can we send pitch decks for consideration? So I can actually answer that. You can send the pitch decks to me at Rolonda, RALONDA, at broadstreetventures.com, and it's broad, BROAD, ST ventures.com. Also for angel investing, and I think Malcolm mentioned earlier, our strategy where we focus on early stage, growth stage, and late stage companies, but the majority of our portfolio, about 85% of it, is in the late stage and growth stage companies, strategically because of the risk associated with startups and early stage companies. Also with the unknown for the time span or horizon of an athlete's career, it's within our best interest to set up the fund where we have a lot of late stage companies or growth stage companies where they're looking at some sort of exit activity, within 2 to 4 years. Do you have any examples of some of your successful investments?
Airbnb is probably the best one.
Mm-hmm.
We started the fund last October?
Yep.
Yeah, and we got into Airbnb, and Airbnb went public in December.
Yep.
So that was a very quick turnaround. Obviously, a very good investment for us. Made everybody in the fund really happy. But and a lot of the companies that we're in, we expect to make an exit out of, and probably by the end of the year or soon thereafter. So that's probably the best one though. It was the first one that hit that we invested in, and it was very, very early in the fund.
Yes. One of my favorites is Dapper Labs. So we invested in them in April of 2021. And shortly thereafter, maybe 2 weeks later after we invested. So when we invested, I want to say maybe their valuation was around 2.6 billion or so. And they have the blockchain technology behind NFTs, which we all know the craze around NFTs. And maybe 2 to 3 weeks after we invested, they were raising another round at almost 3 times that valuation. So things like that make me really excited. Also, aren't there platforms that do not require you to be an accredited investor? There are, and there's a different set of requirements for that. So for us, for Broad Street Ventures, this fund is registered with the SEC. We are limited to only allowing accredited investors within the fund. But there are other platforms that do allow people to invest where you're not accredited investors. There may be real estate funds where they're kind of reaching out to the community, and you can put in 5,000 or however much you want to put in, and you don't have to be an accredited investor. Okay. Are you open to recommending teens open a Roth IRA when they get their first job? By placing the funds in a low fee index fund, have them pull up a compound interest calculator so they can see how their money works for them on Wall Street. Many can become millionaires in a single generation when they learn to pay themselves first as teens. I agree. I think financial literacy, it's never too early to start, in my opinion. We teach kids ABCs. We could also teach them, you receive $3, you can spend 2, save 1, or something along those lines. So I think that the earlier it is when they start to become, financially literate, the better it is for them. Even, for me personally, when I think about how I was raised, my mom was very, very, very fiscally responsible. If I got $100 for Christmas, she's like, here's 10, 90 goes in the bank. And as I got older, when I started to want certain things, I wanted certain sneakers, and she's like, oh, I'm not paying, $200 for those sneakers. And I'm like, oh, I have money. And she's like, no, you don't. I'm like, no, all the money I put in the bank. And she's like, yeah, you don't have that. Like, you don't spend it. And I think that kind of shaped some of my habits. I think that also shaped why I was, as Malcolm said, on his back when he made it into the league, because I didn't want him to end up as one of those statistics that we read about when, someone made all this money and they lost it. But I would say any type of thing that you can instill in them, regardless of the age, will put them on the right path to, becoming financially sound and also becoming a millionaire. Is the strategy to hold all investments for a short period, as your mention of Airbnb holding?
No. So, when you look at late stage, you're looking for, those are companies that are pretty large, like Airbnb. They're going to exit probably within 2 years of you investing into them. So those, are ones where you're getting quick returns. And we know that when you talk to growth stage, it's probably 4 to 6 years. And again, when you're investing in startups, it's probably going to be 10 years before you see any kind of return or exit, or 8 to 10 years. So for us, it's about, and we're not about holding people's money. We want to, if we make some money, we make an exit, we're paying guys out, immediately, because we want them to get their returns from the fund. So yeah, that's really the strategy. That's the expectation as far as like how long your money is tied up. And again, like we said earlier, specifically to athletes, when the average career for the majority of the NFL is less than 3 years, we don't want to tie guys' money up, for 8 to 10 years. We want to be able to give them returns back in 2 and in 4 and in 6 and in 8. So when they're done playing, they're getting checks from companies that they forgot that they even invested in. That's kind of the idea of staggering the fund the way that we've done it.
And it's also about diversifying your portfolio. So we do have about 60% is in late stage, another 25% is in growth stage. The last 15% is allocated to early stage. And it's strategically set up that way. Next question. You mentioned late stage or growth stage companies are 85% of your portfolio. Will you consider some startups if it's promising? And if yes, what is your criteria? Do you want me to take that? I was like, man, what is he going to say? I'm ready for this. I was waiting for this one. Okay, so we will invest. Now, we will not invest in a startup if it's your seed round, or we're not angel investors. We're waiting for you to at least get to your Series A before we start to invest. We're looking at what is the company. If it's a product, we go through the due diligence. We're going to look at the financials. We're going to look at the functionality of it, legal, everything that there is to look at before we make an investment. We will also look at, like Malcolm mentioned, who's leading the round. We like to invest if we see that one of the top 20 VCs is leading that round. That gives us a little bit more comfort and, minimizes our risk. And lastly, like, let's say you are a product or whatever it is. We like to see, are you first, second, third, in that industry? Those are all things that are at a high level important to us when we're looking at investing.
So I have a couple of questions, both for actually all three of you, whoever wants to answer. Was there any deal that you passed on and then became successful and you said, shoot, I wish I would have done that deal?
Not yet. I mean, we're pretty
Yeah.
early. We're pretty early in. Like I said, we just opened this fund in October, and we're pretty excited about all of the companies that we've been in. I think previous to this fund, there's been a lot of companies that I've invested in that didn't turn out well. So luckily for us, no, we haven't had that issue where we've passed on some, but we've talked to a few people who've been in this space, like these big, funds, and they've talked about, passing on. I think we talked to somebody recently. They passed on Coinbase when Coinbase was very, very low. It's just in their beginning stages, and obviously we saw what Coinbase did. So,
yep.
We hopefully our due diligence will keep us kind of in the positive on that one.
Yep. I would say there's two companies come to mind, and it wasn't companies that we passed on. I want to say it was maybe around 2018 or so when I started talking to Malcolm about venture capital and the importance of, getting in that space. And it was right around the time that some people within our network were making investments in DraftKings. So we missed the opportunity. And then DraftKings went public shortly thereafter, and they made like 18x. And I'm like, oh, great. We missed that one. So sad about that. And then also we were trying to get in on Robinhood, and then it kind of fell through at the end. And that still, makes me a little sad.
Right. Listen, there's so much opportunity out there, and there's so much to learn. Malcolm and Devin, what was the thing that got you to the point where you said, you know what, this seems high risk, there's sort of the safe bets and the bonds and all of that, but this is a very different space, and you really have to have a stomach for a little bit more high risk. And I know you have advisors and all of that mitigate that a little bit, but what was the conversation? Who was the person? What was the thing that got you to the point where you said, I really want to do this?
Dev, I'll let you take that one.
Yeah, I know for me, I think even listening to Rashawn, who Malcolm mentioned earlier, just talked about your portfolio and how we all had a certain amount of things already, stocks, bonds, some of us were in real estate. And he really talked about adding venture. It was just an addition. We wanted to add venture capital to our portfolio because for all of us, we all talked about our biggest fear coming in is I don't want to put too much money in anything and then end up broke because I've never had this much money. I want to keep it. And I think when he explained that of you still want to dabble in everything because that's what all of the people that we're trying to be like, that's what they do. They don't just have all their money. And like owners, they don't only have their money in their football team. They make a ton of money all over the world doing different things. And for me, that was like, obviously me and Malcolm are older guys in our career. It was like, these are some of the things that we need to do. So I think that was for me, the turning point.
And I think one of the things that like Rashawn said, and it stuck with me is that we, me and Dev come in and you get a financial advisor and they tell you save, and then you'll try to live off of, whatever returns you get in the market for the rest of your life. And it's like, yeah, you can do that, but you've got to be on a strict budget. And, we know Black people, like we like to spend money, like we like to look good, we like nice things. And so instead of trying to convince athletes and entertainers who are in the limelight and there's the stigma around it to be frugal and be, penny pinchers, it's like, no, create a financial plan that will get you the lifestyle that you're trying to accomplish without you going broke. And he kind of just laid that out, similar to what Devin just said. It's just like, okay, you have the stocks and bonds, you got plenty of that, cool. But what are you doing in these other spaces, whether it's real estate, whether it's franchising, venture capital, to make sure that you're bringing in those, the smaller checks that will, that will go 6x, 5x, that's how you double your money, by doing that. If you stay in stocks and bonds, you will never double your money, right? You can just live off of that. But realistically, that's not a plan for success when it comes to young African-American, athletes and entertainers in the limelight who are trying to live a certain lifestyle, but don't have a plan to match it.
Yeah. Go ahead, Rolanda.
I want to just jump in to say, and I would say this is probably the thing that I was, hammering into Malcolm. When you're looking at the Forbes list, or you're looking at the wealthiest people in America, there's no one on that list that accumulated their wealth through stocks and bonds. Like, there's literally no one that accumulated wealth through stocks and bonds. So when you're looking at some of the wealthiest people in the country, you're seeing that they're in real estate, they're in franchising, they're in venture capital. They have all of these different verticals, but they're not relying on their income from work. It's all of their capital gains through all of their investments in those different verticals. I think it's also important for athletes to understand that they must have other verticals set up so that they can continue to accumulate wealth.
Right. All right, I have a quick quiz for Malcolm and Devin.
Oh.
Which recording artist was an early investor in Microsoft?
Malcolm?
I'm like, it had to be like Master P or Nas, one of the two.
Nope. Devin, Give it a shot.
Jay-Z?
I was like, Microsoft was a while ago.
Yeah.
Lionel Richie.
Oh, yeah.
Wow.
Lionel Richie. And the word on the street is that he's actually made more money through his other portfolio investments than he has in music. And we all know that he writes for other people, and he probably has rights in perpetuity. And, he's very smart in the music business. But similar to how Dr. Dre made more money in tech than he did in music, clearly there's an opportunity, but it can be high risk. So I give both of you, all three of you actually, a lot of credit for, really understanding the critical nature of financial inclusion, getting access to information and networks that you didn't have before, educating yourself and being on this learning journey so that you can be part of the solution, right? This racial equality, financial inclusion, opportunity that we're living in. And it does require exercising very different muscles, having a very different sort of stomach for the tolerance, that it takes to have the losses, but then the big wins, right? The big risk, big reward, little risk, little reward. And so question for Malcolm and Devin, and this is, may sort of stretch your imagination. Maybe you've thought about it. If you were to become billionaires tomorrow through tech investing, in what ways will you pay it forward now that you have such significant wealth? Are there problems you want to solve? Are there things you want to create? Are there ways you want to pay it forward?
Yeah, Dev and I have been doing similar work and have done work together for a while now with way smaller budgets than $1 billion. So I think if you look at what we're already trying to accomplish with what we have, that's in financial literacy, that's in the digital divide, it's in social justice, it's in policy, education, all of these areas. Whenever you add, dollars to that pot, you just are able to leverage, greater things. So it's not even about how many checks can I write, as a billionaire, which will be a lot. But also you're in other spaces where people give you money when you have a success of investing. So I can leverage just the ability and my knowledge off of doing this and raise funds to really have even 10x, the impact that I can have on my own. And even that's not even what put my own money into it. So I just think for us, one thing that I've learned, we figured out how to leverage our celebrity to get into some of these funds. And once we kind of accumulate that income, that wealth, that just exponentially, gives us more space to grow the impact that we have. But the desire to do it is really only, our impact is really only limited right now by our capacity. And so hopefully if we grow that, we'll see some things that we've never seen before.
Yeah, I agree 100%. I just look at something we did in Boston where in Massachusetts, we were able to go and fight policy and get a bill passed that brought $1.1 billion into the school system. And like you think about things like that, like how hard we had to fight of talking to our owner and him talking to people he knows. You know, you make us both billionaires. Like those aren't, you know, talking to this person, it's a direct phone call to somebody. And I think that would give us a lot more access to do the things that we're already trying to do. So it really wouldn't be like reinventing the wheel. It would just be now pouring more resources in some of the things that we've already seen. And it would honestly be a lot of fun. So if we can make that happen, I think we both look forward to that in the future.
Well, I'm going to challenge both of you to start manifesting, you know, the billionaire achievement. And we all know it's not, you know, just another checkbox. It's really about creating more Black multimillionaires and billionaires. It's critical this generation, not waiting 20 years, right? So again, I give you both a lot of credit for, you know, being in it. You got to be in it to win it. Talk a little bit about any direct investments that you do. They could be passion projects. Some you might want financial returns. Some you might, hey, I love music, so I'm going to invest in, you know, something like that. There's a gentleman on the phone that's a producer on Broadway and does some other content, particularly important content for the Black community. You know, any interest in those kinds of things?
Well, I have a production company, you know, specifically to, you know, use my voice in different platforms other than sports. One, because the sports platform is going to be taken away from me at some point here soon. And I'm very, very limited to, you know, what people have the stomach to talk about and people's attention spans on sport things. So I started my own production company, Listen Up Media. And we're trying to make content that specifically tell unique stories about Black folks. And I think that that's the space that's missing. We see a lot more storytellers, but it's usually kind of the same 8 to 10, you know, Black folks that make all of the films. And I think there's a space for a diverse amount of Black stories and Black voices. That way, you know, people can see us in different lights as well. So that's another vertical in which, you know, that's more of a passion project for us. But we started that about 2 years ago. And so we're still, you know, we're taking on ideas and pitches for that.
So doing your own content and then also investing in other people's ideas that they pitch you, and then you will executive produce and things like that.
Yep.
Mm-hmm. Mm-hmm.
And I know for me and my brother, one of the things that we're doing in real estate, we're trying to combine some of our college friends. We have a friend who's a financial advisor, a friend who's a federal agent, of trying to use our resources and what all of us have kind of done in life and trying to build some stuff together. I think, like Malcolm said, our peers in the NFL, as we try to work together, it's usually a lot easier. Guys have made a lot of money, but now it's, you know, I'm trying to connect some of my college friends and high school friends and trying to do some of those same things and figuring out how to maneuver that. So I know that's something that I wouldn't say necessarily like I have to do, but it's kind of passionate to kind of get more of my friends and different people that I know directly more involved in some of the things that I've been able to be involved in.
Yeah, that's great. I think, you know, we had done a conversation with Culture Shifters. I think it was last month with Terry Crews, and he talked about something that I think is so fundamental. He said in his experience in the Black community, there were two things that he recognized were a problem. One is lack of access to information, and then misinformation. And he's working really hard to make sure that those two things are addressed in his lifetime, which is why he's leaning into so many different things, whether it's investing or technology or just being, you know, on Clubhouse and other platforms and relationships that he's building so that he can educate himself on what he might be missing out. Because around his dinner table, you know, your dad wasn't on the board of this company and didn't know about these investments. And so not really having that as, you know, sort of a standard way in which you were raised and have access to that is something that he's making up for now. And so he just sees, you know, he's in the crypto space and he's in the technology and production space. So it's nice to see both of you there as well. In fact, speaking of passion projects, my firm is taking on building the nation's largest library of case studies on Black entrepreneurs. And if you can believe in the year 2021, that does not exist, that there's not a central place on stories that go beyond, you know, Reginald Lewis and Madam C.J. Walker, right? There's no, the founders of BET and the Robert Smiths and the 32-year-old that just sold his tech company for $3 billion. Nobody even knows his name. So how do we teach the next generation? And I'm talking rewriting the history books, in a way that's more inclusive and more accurate, right? Because we know that, for example, Mark Dean, a Black man, created the color monitor for the computer. A lot of the technology architecture, is he in any of your history books that you ever read or rooms that you're in? So, the work that you're doing, Rolanda and Malcolm and Devin, and how you're, raising your profile and even being on platforms like this to share what you're doing with our audience. We have 11,000 people in our network, and sharing what you're doing is really important. One, can they help? Two, can they benefit from it? And three, can they be enablers of your continued success and wealth creation?
100%. I think I think you're right when you talk about misinformation and just those things that are out there in the Black community. Right now, I'm working on a documentary studying just that, the history of Black wealth in America. And I think the biggest thing that I've learned so far is that Black people have created a ton of wealth and for themselves in this country. And it's not just about, the education, and if you knew better, you do better. There are some real things that block that, that inhibit the ability to create wealth, and things that have happened in history that have stripped people from wealth. I think coming up here will be the centennial for Black Wall Street in Tulsa, Oklahoma. And I remember learning about that probably when I was 25 years old, and not even having an example until that time of, a community that practiced, a Black community that practiced group economics, that was wealthy, that had businesses, schools, churches, all these things. And then in doing more research, you found out that Black Wall Street wasn't that exceptional. There were a ton of different communities that had a lot of financial success in doing it with group economics and being innovative. And this was in the middle of Jim Crow back in, the early 1900s. Right. And so I think those lessons are ones that we need to put back onto the table now in 2021 and start to figure out how we can recreate some of those vehicles, recreate some of those communities, and teach those lessons en masse.
Mm-hmm. Yeah. Rolanda, Devin, any final words before I wrap up?
No, I appreciate being on. I think anytime, obviously getting to be with Rolanda and Malcolm and just talking about what we're doing, I hope it brings inspiration to somebody else. And I think, like you mentioned, being able to continue to work with other people and allow people to be a part of this or start something of their own is really what it's all about.
Right. Right. Rolanda, anything from you?
I'm just going to continue to manifest those billionaire vibes that you sent over to Malcolm and Devin.
Yeah.
In particular, Malcolm knows what I'm going to say. Yep. I told him years ago, you're going to make more money in business than you made in football. And what did you say?
I laughed at you.
You laughed. So I am waiting, for him to become the billionaire from business. So I will have the last laugh.
Slow and steady wins the race, Rolanda. So you were there, you were consistent. Malcolm, how lucky, and Devin, how lucky you are to have Rolanda just ensuring that, what you can't see right now is something that when you're ready, it's like, what's the saying, when the student is ready, the teacher appears, right?
That's it.
Yeah. And in this case, the teacher's been there the whole time.
Well, maybe you just need glasses and you got them.
Right,
so,
yeah.
Kudos. But a couple of things I want to share with everybody on the line. One, as a result of Culture Shifting Weekend, when we realized that we wanted to be distinct, nobody needs another event for inspiration, education, and networking, right? We all go to plenty of those. What you need is opportunities for deals, collaborations, and wealth creation. That's what Culture Shifting Weekends is. We try very hard to put the right people in the room with the right message and the right checks and the right sort of abundance mentality and generosity behavior. And they all have the ability to do that. And a lot of times these are people that are under the radar. So as a result, when we realize that we can be pretty distinct in this area, we've gotten $446 million into the hands of our community of people that show up. And please join us at Culture Shifting Week in Silicon Valley, June 17th, 18th, 19th, and 21st. You can visit cultureshiftingweekends.com. Please visit Culture Shift Labs to learn about the work we do at my day job, which is advising Fortune 500s, tech companies, and investors. We want to make sure diversity, equity, and inclusion is progressing with real outcomes. And I want to say thank you to everybody for joining us today. Malcolm, Devin, and Rolanda, keep doing great work. We will make sure that we talk to you about our foundation and the Center for Black Wealth Creation that we're going to put people through to create more multimillionaires and billionaires. So we will be in touch.
Thank you.
Thank you.
Thank
Thank you, everybody.